Well, happy Saturday, everyone. This is Greg Dixon for the Note Center. And here we're going to talk about investment, very investments here. We have three guests here. They all have different approaches to things. And why don't we start with Alden? You can introduce yourself and what you do, and if you have an invitation or an offer to collaborate or whatever it is, that feel free to let us know.
Absolutely. Well, I'm Alden Guajardo. I'm president of Silvercrest Opportunity Fund and operate in niche market manufactured housing in the Arizona market. We provide above average returns secured by first lien, double underwritten, affordable homes in the Arizona market. And that's at mobilemailboxmoney.com. We've done 350 doors, 10 million, $15 million in private capital over the past 8 years. And just happy to be here today, Greg.
That's great.
We've got a mastermind we put out every Thursday, 1 o'clock Mountain Standard Time, where we do like a live deal flow market where we talk about our deals, and that's for free. You can sign up at mobilemailboxmoney.com.
Okay, that's fabulous. And yeah, you've been a frequent contributor to our discussions before and always have interesting things to say. So, Khaled, do you want to introduce yourself? And
Yeah, yes,
yeah,
yeah, it's my pleasure. First, this is Khalid from Petra Real Estate, and we're doing real estate in Dubai. Our head office in Jordan. We've been in the market since 2006, and we are focused on consultation base for real estate investors in terms if they are looking to buy blocks of lands or buildings, or even for individuals investments like buying apartments for renting out or flipping in the future and sell for higher value.
okay. So again, for our audience here, if you have any questions, just put them in the chat, and we'll try to answer them. And Rodney, I've known Rodney for quite a long time, and he recently retired, and he's generally our voice of reason on these shows. So, so why don't you let us know what you're up to now?
Well, after my 40 years of service to FDIC, I am fully retired now officially, and I'm enjoying the life. I'm able to dedicate all of my time now to my investing. I am a professional investor, not just notes and real estate. I've dabbled in a lot of different areas, um, but I'm specializing in mortgage notes, and it's been a great uh, year for me. Probably the last quarter. Alden knows because I picked up about four notes from him, and to go with along with my other notes and other investments. So things are picking up, and I'm able now to hypothecate, and I have lenders providing the funds that I need to acquire the notes. So things are picking up there. I'm targeting people that have money sitting. I like to call it lazy assets, and they're not doing anything with it. Or those people that uh, have investments or what is it? High yield saving accounts that barely top out at 5%. So I'm offering them a lot higher percentage with a consistent cash flow if they invest in the notes that I come across. Um, and things have been going well.
Okay, and Ivan Torero has joined us.
The doctor.
The Doctor Ivan. So
Hello, how are you?
from Florida. So what we've been doing is just introducing where we're at, what we're doing, if we have any offers. And so we've had, you and Rodney are both in the note space, and you also do some property development too. So what's your current project? If you could just introduce yourself here.
Hi, I'm Dr. Ivan Terrero. I am the note doctor, and I have been investing in notes, which is my main source of income outside of the dental office. And we're doing some property development, and we've gone into offering earnest money deposit, basically transactional funding also, because we've come across people that have that need, and we're helping them that way. And we're also helping, again, people like Rodney said, that have lazy money on the sidelines earning 3 or 4%. We can easily double that by investing in notes passively.
Okay. So I'm just I sent a note out to the audience here if they have any questions. But do you have any questions for each other here? Maybe I'll see if this view might work better. There we go.
Yeah, Khaled, maybe you can talk about what kind of avenues you guys go after, what markets, and what that kind of looks like. I've yet to come into a contact with someone from Dubai, so cool to kind of make an international connection here today.
Oh, from Dubai. Wow.
Yeah, hi. How's it going? Yeah, Dubai, it's booming now for real estate, and people are coming from everywhere. We have more than 200 nationalities living in Dubai, and the majority are foreigners. So the locals only 10%. So we are talking about 90% are foreigners. And for the property, there is zero income tax on property returns, whether it's rental returns or capital appreciation returns. So there is zero tax income. Okay, so no one will pay any taxes. So that's why people are rushing to buy. And it's a freehold for a lifetime. And you can pass it to your kids or your goodwill. You can mention that this property will go to my wife or to anyone. And the benefits here is that it's well organized, that even you can buy a property online, and you can buy a property under construction with the monitor of the government. The governments are in control for all the under construction projects, and they dedicated a bank account specialized for each project, and they are not allowing the contractor to withdraw any money without a percentage of completion. So in this way, the government involved, and many developers are here, people coming, and zero income tax for real estate, enhancing this investment. On the other side, Dubai or the UAE in general, it's a very safe and secured place to live and to start a new business. People are coming for the safety purposes. Anyone that's facing war within his country or conflicts or here and there, immediately the first target or place or the easiest way is to go to Dubai immediately, start a new life, buy a house, set up a business, and move on. So those advantages attract many people to come. The tax also attract many people to come. And in general, we are every year having increase in the population for 5%. The population in the UAE is 10 million, and almost 5% every year. People are coming and living, and the expectation to have 15 million within 10 years, and the construction is going on. There is more than 50 to 100 developer in Dubai alone, okay, without considering the other Emirates. Last but not least, the currency here is fixed against the US dollar. So this will secure the any fluctuation within the currency. And when you are buying a property, immediately you can sell later on with and convert the amount to the US and transfer the money outside the country. So with all those aspects, people are coming and real estate here is booming.
Now, as a hedge fund here in the U.S., we look at potential opportunity. We pay our investors 506C Reg D above 10% returns in a debt structure. Where's the biggest opportunity in Dubai outside of development? Say someone were, I would imagine that there's not much value add because everything's so new in the area. What does that look like? Where's the best return on investment and most stable place to place capital in Dubai?
Yes. This is a valid question. Normally, real estate will do between 5 to a maximum, let's say 10% in the normal case situation for as a ROI. Okay, but here in Dubai, the formula is different because there is a huge capital appreciation every year. We're talking about more than 10% every year for the new projects. يعني, I've witnessed personally a couple of deals went for a double capital appreciation. The investor bought a unit for, let's say, $1 million, and at completion, because they are buying under construction, at completion, he made a sale for $2 million. So we are talking about capital appreciation in 2 or 3 years within construction, which is more than 15 to 20% per year, okay? And in some locations, you can get more than that. So the idea, there is a capital appreciation plus the normal stable rental income with a zero tax. There is zero taxes against those property investment. This is in summary what differentiate this investment from other investments.
Is there any bank financing for stuff in Dubai,
Yeah.
say international investors?
Sure. There is a bank investments, and you can approach the bank as a foreigner, okay, and they will lend you a money and they will study your case and provide you finance against the property. For sure, also you can seek your bank at your home country, and if they can also provide that, it's doable.
What about average purchase prices of something in the mid-range to lower tier of acquisition cost? What does that average look like in there?
Where the area here is or the market in general in Dubai, there is a high luxury classes, and there is a medium, and there is a low classes. So there is we would say, let's say an apartment for 1 bedroom in a decent place will cost around $600,000. Okay, this is in a nice place, okay, that you can expect a capital appreciation and get a good and high return on investment. Okay, and if you consider other locations, the prices will be 10 times higher, okay, in a specific location. So it's vary from the location, from the developer, seaside, not seaside. Yes.
And what's like rent? What is average rent in the area?
There is 2 types of rent. Okay, there is rent, they call it the annual rent, or you can go for a holiday home rent. Okay, the holiday home rent, you can hire a company specialized in holiday home and put it under booking or B&B, or because there is a demand more than the hotels here also for the Airbnb and the holiday home rentals. At the holiday home rentals, you can generate up to 15% per year. Within the annual rental, we're talking about between 5 to 10%. Depends on the area and the location and the type of the property.
Oh, great stuff. I feel like I'm asking all the questions. Super curious.
No, go ahead, please, go ahead.
You know,
No,
it sounds like you liaise capital into various different opportunities. How are you finding your investors? You know, is that online for you or really just in the local area? I've been interested myself in traveling to the UAE and Dubai to try and garnish capital to the States here. But, you know, they're getting such great incentives to invest within the country. You know, how is that navigated for you? Do you guys liaise capital in the States as well, or is it really all just a local projects?
no. For us, you can buy from anywhere. I have clients from Mexico, from the US, from the Middle East, and from here also locals. The idea, it's not necessary to have a residency to buy. You can buy and enjoy your investment, okay, and you don't have to leave and or stay within the UAE. There is no regulations to stay or must to stay or to have a residency, but there is an option. If you bought a unit above 500,000 US dollar, they will allow you to take a residency. They call it golden residency. Okay, and it's valid as long as you have the property. So you can buy also online under construction. I have clients. They are foreigners. They cannot now come and visit Dubai. We'll show them the drawings. We'll show them the area. We'll connect them with the developers, and we will check the options. Okay, we'll calculate the ROI, we'll calculate everything, and they can transfer money directly to the account that I mentioned for the project, because each project has a separate bank account monitored by the government. So they will start paying like an installment until the project is completed.
For international capital, you know, banking and wire transfers could be a challenge. Do y'all implement any crypto transaction base to kind of subvert issues sending international wire transfers?
Yeah, this already implemented with some developers. They are accepting crypto transfers. Okay, but the money should be clean. Okay, from legal sources, and it should be there's an evidence. Because the UAE in general is against any money laundry or something, but there's an option.
All great stuff. Do you ever have people that look for investments in the States here in the U.S. as far as their
Yes,
interest?
we will be in touch. I think after this, yeah, we'll build a connection. Yes, I have. Okay, but I need to check the location and the area, and we will have a discussion into details. Okay, and I'm sure you have also from your side to Dubai.
You know, we have interest. We definitely come across a wide variety of investment clientele, you know, and to have different avenues to be able to direct capital is of utmost importance, because diversification really is key to high net worth individuals in order to preserve capital. We just saw silver drop 20% the other day. Gold's gone pretty crazy.
Yeah.
You know, to buy an average single family home here in the US, it doesn't just cash flow, you know, return on investment is pinched, creates a lot of challenge for people that have money either in low yield savings accounts or in bonds, just because they're looking for more security when they're being eaten alive by inflation. You know, all of that is fantastic to have at your disposal. We went to the Australian Property Expo in Sydney about 3 years ago, 3 to 5 years ago, and we got a list of 10,000 investors that are actually more Chinese. So to bridge these different avenues and provide diversification, will ultimately attract more capital. And it's about aligning yourself with people you can trust at the end of the day. We all are in the want for big return on investment, but, the higher important factor is not losing money.
Great, man, great.
Any,
we have investors. Okay, we are doing the same. We are investing for them for a couple of units, some residential, some commercial, some lands. Yes, we have those implemented within our strategy, but for sure we will be in touch after this.
What about conferences? Any great international conferences that are worthy of discussion for real estate investment?
Yeah, sure. There is the Cityscape, if you heard about Cityscape. It's well known in the Middle East. It's happened in Dubai annually, and so it's happening in Saudi Arabia, and Qatar, or the Gulf region. It's a very popular exhibition for the real estate. It's very famous. It's called Cityscape.
Cityscape.
And when is that being held?
I'm not sure this year because it was held in November in Saudi Arabia. I don't know this year in Dubai which time exactly. Okay. Top developers from all the Middle East will be there, not only from Dubai, from all the regions, some from the US, some from the UK, some from Turkey, some from everywhere. They're coming.
Yeah, it's important.
I need to know about the notes, guys.
Well, one other question, Khalid.
Yeah, go ahead.
Are you associated with one group or one capital, one homes?
What do you mean, one capital, one home, one group?
You're saying information that you just provided. I was contacted by someone in Dubai, and they mentioned the same proposal that you presented. And I was just wondering if you were associated with, it's a company called One Group,
Yeah.
and One Homes, and One Capital, but one seems to be the theme among all of them. So I'm not sure which one is the umbrella.
There's many developers here. Okay. There is one developer called One. There is one agent called One Agent. There as a real estate agent. But there is a company called One Developer. Yes, it's here.
Yeah, the person
we have contact because as a real estate agent, I must sign with most of the developers. Okay. To have many options for my investors and to make a good relation and to understand the market and what's going on, who's developing here or who's doing that here or that there. Yeah.
Yeah, the person that I dealt with was Salah Al-Din. No? Okay.
No.
I'm taking a shot.
You know how many agents in Dubai, by the way?
No, I have no idea.
It's more than 30,000 individuals working as an agent.
Wow.
Okay, so for sure I cannot remember the names, but top ones, yes, well known. Okay, top companies also well known. Top developers well known for everyone. Okay, well, we are associated with the top developers. The most popular one who built Burj Khalifa, the tallest one in the world, which is Emaar. Okay, We have a good connection with them, and we've sold a couple of units, villas, townhouses, and apartments.
Yeah, I was pretty interested. I was hoping to bring my sister in on a deal where we go for one property, take it through the construction phase, and eventually get to where we could rent it out and benefit from it from there.
Yeah, sure, man. Me personally, I'm investing. Yani me as a person, okay. For me personally, I'm buying and investing myself. Okay, sometimes I buy at a low price, sometimes I buy at a high price, depending on the location and the developer and the unit. Okay, I'll calculate the risk, okay, and see the market trend now. I'll put my client into all details, okay, to make a firm decision and have an exit plan, okay.
Right.
So sometimes you need to pay more, but you have a good exit plan because the unit will be most likely will be sold faster. Depends.
Yep, that's the blueprint.
Yes.
So who would like to give a short course in note investing here?
Please. I
Alden?
need to know about it.
Yeah, I can go ahead and give a little once over. It's quite interesting to pivot from a rental strategy internationally to a note investment portfolio in the States. And it's a cool comparison because in Dubai, it sounds like there's a return on investment for a long-term rental. Whereas right now in the States, you can't just buy a single family home and cash flow. 9 times out of 10, it's going to be a negative annualized return on investment for what you pay in debt service and what you're getting in rent. And really that strategy in the States is trying to bank on appreciation for long-term rentals, but appreciation's really plateaued. We saw such huge appreciation. So where do we go, out in the market for a secure return on investment that could be a monthly income oriented investment strategy? That's a note investment strategy. And to find performing notes paying above average returns, first lien is like gold out in the market. So in the Arizona market, average purchase prices are $375,000, and it creates an opportunity to provide affordable housing in combination with a note strategy. So the demand for housing is high. The demand for private financing is high because of the concrete guidelines an individual needs to facilitate financing on a single family property. So that was kind of a painted picture around the topic of notes and manufactured housing in the Arizona market, why there's demand, why there's a problem, and why it's needed for a portion of one's portfolio right now. To buy a note, you have your due diligence of underwriting, making sure taxes and insurance are paid, and ultimately the lien recording is recorded on title. Most people don't know you can buy a mortgage. A mortgage is a note. In other words, a promise to repay. So you buy a income generating position, taking the bank's position, right, on that note in exchange for a first lien and monthly payments over a desired upon term. Most terms are 10 to 30 years, depending on the collateral that you're choosing. But right now, there's not many other alternatives to acquire a cash flowing position outside of note investments. And historically, you could buy a plethora of notes on the secondary market. You could go into a non-performing strategy and buy from a bank, but a lot of that's kind of dried up. Where we have found opportunity is originating the seller finance notes on manufactured housing, providing affordable housing, but also an income-oriented investment strategy in collateralized lending, buying a note that's collateralized by a first lien to a physical asset and a double underwritten performing borrower. It's kind of unique within that strategy. Warren Buffett owns Clayton and Cavco, two of the largest manufacturers of mobile homes are actually here in Arizona. Most people don't know 10% of housing is manufactured housing in the nation, and average purchase prices nationally for single family are, I think, $400,000. So the availability to passively diversify and actually earn a monthly distribution as an annualized double-digit interest rate is virtually non-existent outside of these strategies. And we've had Rodney, built up to start raising capital into some of our notes as well as other notes that he finds out on the market. We've met Ivan Torrero at multiple national note investment conferences. So it's great to be in the room and kind of talk about what the opportunity is here in the nation and why, someone may position a portion of their portfolio into being the bank. Being the bank provides collateral, an income-oriented investment strategy, and a position higher in the capital stack to make the money first. So opposed to buying with bank leverage, paying your loan, and hoping there's an additional return on investment for the speculative rental strategy, you're getting paid first within that transaction because you positioned yourself as the bank.
Well, that's fabulous. Thank you.
That's well said, and I would echo what Alden said about focusing on seller finance notes, especially in the affordable housing space, and it serves something that's dear to my heart of providing affordable housing to people that have been priced out of the traditional real estate market. And the manufactured home space is where you can do what I would call, you can do well by doing good, providing affordable housing, providing financing for individuals that may not have enough money for a traditional home purchase. So I like focusing in that area because, again, it is a social, what I see as a social contract that we're offering. And at the same time, we're helping establish neighborhoods, making them more attractive to these individuals. As more homeowners as more people buy homes in those areas, they have a tendency to take care of their surroundings, and it becomes a neighborhood.
I mentioned average purchase prices nationally, I think, is about $400,000, and the average income of the American combined household income is like 60 to 70. Just to qualify for a $400,000 home, you got to make $80,000 a year with no debt. So where does the average American find either ownership or an affordable home anywhere in the nation? It's non-existent virtually. And a lot of people think, prices may start to crash and things of that nature. Anything can happen at the end of the day, but the likelihood of seeing another 20% drop in pricing is not highly likely. There's a shortage of single family housing across the nation. So where's the give? Where does that family find housing around the nation, and how do we strategically position ourselves to provide a solution to a much needed problem that happens to be the number one thing being talked about outside of politics on the news is affordable housing. That's in manufactured housing. They're trying to figure out how to build affordable rentals, but with labor and material costs, by the time they build it and buy the lot, it prices it out of affordability. They're trying to pass a alternative dwelling unit access like boxable, but you have to go through a stringent process, and there's only so many properties that are actually eligible to place those properties. It's really, I equate it to a potential gold rush. We've seen the institutions coming in and buying the parks themselves, the manufactured home communities, and as they've come in, they've inflated potential acquisition and reduced the cap rates for what you can see out on the available market. So it just kind of shows where the market's going, why there's a need. You've got Warren Buffett and other major institutions like BlackRock and Vanguard, State Street buying mobile home parks. there's a new day and age. This isn't your grandmother's manufactured home anymore. It's actually income earning, upstanding citizens with average income nationally needing a potential solution, and just to strategically place a note strategy and combine that with manufactured housing. Now you're meshing two integral needs within the nation, one being affordable housing on the end user standpoint, but that house needs to get financed. That's where private capital comes in. Private capital positions itself to provide a much needed solution to a problem, being affordable home ownership. And with less capital, we can now perform more doors and earn an above average return than adjacent real estate investment strategies. I think this is the new California gold rush.
And to piggyback off of what Alden and Dr. Ivan have just said, I'll bring it down to a layman's level of what I'm looking for, and most of my colleagues in the note industry. We are looking for consistent cash flow. So we know people will pay as agreed. Some will pay off the note early. And if things go bad for that borrower, we sometimes have to foreclose. But again, we as individual investors have the opportunity to work with that borrower, find out what the problem is, and assist them, and if possible, modify the loan, and not only helping them, but keep your cash flow coming in. But again, if we're running a business, we don't want to foreclose, but in some cases we do. And if that happens, we then take over the property itself. That collateral comes through as a potential increase in yield as we go through the foreclosure process. So that's in a nutshell how we operate to not only help the community stay in their homes if that can be done, but in the bitter end, something that looks bad for your situation because they've stopped paying, it could potentially be a gold mine because of the way we purchased the note in the first place.
Yeah, I'll piggyback on that. I was a landlord a while back, and we had supposedly a good tenant. The tenant was paying for 6 months, and after the 6 months, they stopped paying. So it took us about another 7 months to get the tenant out after negotiating. And when the tenant left, we had a significant amount of repairs to bring the house back to the rentable standards. But all that time, I still had a mortgage to pay. And guess what? The bank never went to the house to make sure that there was a renter. All the bank wanted was that mortgage paid each and every month. So that served as a lesson to me that being the bank is the best place you want to be as an investor. It's passive. And like Rodney said, if they pay on time, it's great. If they stop paying for a while, we modify the payments. And if they don't pay, what we do as a bank, we have them vacate the properties and we start all over again.
So
but just I want to comment on the tenants in Dubai here. If you are not paying immediately, your contract will be terminated, and immediately you can take over the place immediately.
That's very good. In the United States, since there are 50 states have their own laws regarding tenants and landlording, and they're divided into two separate categories. One is judicial and one is non-judicial. When it's judicial, you have to go before a judge to have that person vacate that property, and it's a longer process. There are states like Texas and Alabama and Arkansas where you can remove the tenant in as little as 21 days. So as note investors, we tend to invest in those areas that are non-judicial. It helps us with our cash flow and keeps our costs down.
Non-judicial being investor friendly, in other
Investor
words.
friendly, exactly.
Yeah, yes, got your point. As a culture here, they only trust to deal with banks. If we just to for the notes, the culture here would like to, okay, I trust the bank to deal with, okay, even if the bank is higher or their regulation is hard, okay, but they still put trust within the banks, and no one giving. There is some financial institutions. It's not like a notes. It's like they are giving loans, okay, but privately. They are doing okay, but in our culture, the majority they trust banks.
Here's where the rubber meets the road. Why would someone use private financing instead of getting a loan from a bank? Say this property were in Dubai, right? There's the individuals that come that want to buy a home and fall just outside the strict guidelines that the bank has deeming risk mitigated for them to facilitate the financing. That's where private entities come in. So
Yes.
opposed to having that one individual just walk from the transaction and they can't qualify, they can't buy, they may be able to fit an investment house, say Silvercrest or another private investor's risk mitigation checkbox or due diligence within that strategy to facilitate the financing. If someone can qualify for a bank, they're going to get a loan from a bank, 9 out of 10 times. There may be some extenuating circumstances, but in the want for additional transaction base, or maybe there's not financing available on that specific property. Like in Mexico, you can't get bank financing for a condo. It's either builder financing or really another private entity getting financing. So maybe for the people that are watching that don't understand that, why someone would even take a private financed note opposed to getting a loan from a bank, it was a good kind of breakdown.
Yeah, there's a joke, and one of my friends said in Canada, it says at one point, if you can go to a bank and prove you didn't need the loan, they'd loan you the money. Now they won't even do that.
That's how true.
Yes.
And there are people that are
100%.
freelancers that have non-traditional employment, what we call a gig economy, that can't qualify for a traditional loan. And these are banks tend to shy away from people that earn 1099 unless they're a certain level. And with those individuals, that's where private bank financing comes in. Like with one of the notes that I originated on a mobile home, the borrower he worked on the oil rigs and he made a lot of money, but it was, again, 1099. He wasn't a traditional W-2 employee until he was able to establish his status here in the United States. And at that point, this is where we came in. We provided the funding for the purchase of his manufactured home. And again, we were able to solve a problem that a traditional bank could not solve.
Great.
So how does owner financing fit into this model here?
So owner financing is the origination of that said note or mortgage or collateralized loan by first lien position. In other words, you're buying a home, selling it to John on terms, originating a private loan, right? John gets qualified. He facilitates an underwriting criteria and agrees to the rate on the contract for a 20-year term or 30 or 10, whatever the term is agreed upon between the two parties. And they both agree to consummate the transaction. In exchange for the buyer gets ownership of the property, immediately titled over on title. The lender gets a lien position, monthly payments, a down payment for a period of time. So owner financing is the origination of that collateral an investor would inadvertently either buy or loan against or become a per unit owner share in a fund. That's the process of originating a loan.
Yeah, thank you for that.
So aligning capital with people that own or finance homes creates a deal flow of potential investment opportunity, right? So
Yes.
as we originate these notes, we can only originate so many because we end up running out of capital, burying our money in great cash flowing assets. But we don't, now we have our money, income generating in an asset, but we don't have enough to go out and do it all over again because of the deal flow that we've created. So in order for us to continue to provide additional deal flow within the strategy, we either leverage against these notes and borrow a portion of that unpaid balance and go out and do it all over again, or sell that note to another hedge fund or private investor like Ivan and Rodney here today. Pretty nimble in that accord once you understand the dynamics of a note investment strategy.
That's a very good explanation, and he jumped the gun. And again, Alden has been doing this for a while, and I like his approach. And I couldn't have said it better.
What did that come from? That came from attendance in real estate note ecospheres, from the noteinvestoruniversity.com providing education to Paper Source, the Note Investment Conference, Paper Trail, Diversified Mortgage Expo, the Note Expo. And I think I've probably seen Ivan and Rodney at near probably every one of those events. But also, there's actually a great event coming up at the end of February. Gerasi Law Firm is the largest private lending law firm in the nation, and they actually have two events in Vegas. I think it's February 28th and the 30th, possibly. So two events back to back in Vegas at the Wynn, and I think at Caesar's Palace. And that's another great one to potentially attend for either learning to become a private lender and invest in notes or invest in hard money loans and things of that nature, or just make additional contacts. That's really where all of my expertise and sharpening of the iron for how to properly communicate what a note investment strategy is, why it's an opportunity, and as well as Arizona Real Estate Investors Association. So, you got to get out at these events. That's why I was asking Khaled here about the Dubai events. I'd love to come out and see what that looks like.
That's very interesting, those Dubai events, because I am originally from Dominican Republic, and a lot of my friends and colleagues that live in Dominican Republic have gone to Dubai, and some of them have even invested in Dubai. So it's been surreal having met you here.
Thank you.
Directly from Dubai.
Thank you. I'll check and I'll pass for you the exhibition date and details. We might join together the exhibition and seek a way to present each other in a way that supports each company.
Collaboration is key.
Collaboration.
For sure, 100%.
So I want to go back to something Alden said. There's a limit. You run out of money for originating notes, right? So I think all of you have some offers, or most of you have offers to people who just want to be a pure investor. All they want to really know is the return on the investment. They don't need to worry about the mechanics of evicting somebody or, all the legal things. They just want to know, it says, if I put in my $50,000, I'm going to get a percentage a year. So to somebody, I know Alden for sure has offers that. And I think maybe Ivan and Rodney as well. So you want to maybe talk about that?
Well, we have performing and first and second position notes available. I also have a pool of non-performing notes available also in my network. So if anyone wants to invest passively, we can hypothecate, we can do a JV, and we can tailor a note that would be that can fit the investor's criteria. And the notes again are secured by a hard asset, a real estate, and it is a secured asset that can add to your bottom line on a monthly basis.
So we originate about 5 notes every month via seller carry finance. I just sold a note to one of my investors via hypothecation. Hypothecation means to pledge an asset in order to garnish capital investment, right? I pledge my lien position, that investor gets their collateral, and for 1025, their acquisition cost, they're making $854 a month paid monthly for a 1-year term. And then 1 year from now, we come back to the table. I say, hey, congratulations. You've been receiving your distributions. You have your lien position on title. Would you like to either auto rollover or we liquidate that position that maybe they have a family member going to college or a wedding coming up, something of that nature that they need the capital to redistribute elsewhere. That provides liquidity to that transaction, and you effectively hitch your cart to a qualified operator with no maintenance, management, insurance, and taxes, right? You become the bank and you position yourself in the highest position in the capital stack and start cash flowing in as little as 30 days. So I have about 5 to 7 performing notes, as well as some shorter term construction lending, private lending components, and then positions available within my fund. So my fund is a 506C Reg D accredited investment offering. And coincidentally, since we have someone international today, international investors don't have to fit accreditation. So it could be a wide targeted opportunity for individuals that may be watching internationally. What do we pay our investors in the fund, Reg D? So pending accreditation, we pay our investors 10% return paid monthly for a 1-year term, a 12% return for paid quarterly for a 3-year lockup, and a potential higher income generating opportunity for a 5-year lockup at a 14% return. Now, each tranche of those offerings will come with specifics regarding their service fees and things of that nature, but we try to be pretty transparent, quoting accurately throughout our interactions.
And from both Dr. Ivan and Alden's investment platform, I do something similar. I will provide, I do terms of 3 years. We lock in with the investors to provide the funds for 3 years. And then if they so choose, they can continue, but we will continue after modifying the contract. I then will put them, the first 3 years is interest only for that particular investor. So after that 3-year term is over, and either if they want to pull their money out, we will amortize the remaining term of that contract that I have. I think it's easier to pay them off under an amortized schedule than interest only, so I don't have to come out of my pocket for any additional funds at the close of that term. But again, I'm utilizing their money to acquire the note and providing them to get a higher yield if they're not getting any great returns on their money now, whether it be a high interest loan or CD. We can basically double what they're getting from their current situation.
So, Rodney, what kind of percentage return per year are you offering?
I am averaging around 9 or 10%.
Okay. So what would we talk about next week, one of the options here is for one of you to do maybe a 15-minute presentation in detail about what you do, or we can talk about something like hypothecation and maybe go into depth about that. Something. So what do you have and what topic would you suggest for next week?
Hypothecation's a great one because I think a lot of people maybe don't understand the dynamics of what happens if a non-performance happens. You know, what if this happens? Where do I get my lien position? You know, could kind of get pretty nimble in that accord. And historically, a lot of note investors are non-accredited. So providing a little bit more education into how that's a potential opportunity could I think be advantageous.
Okay, sounds good.
Nice.
Any last comments before we let people go and continue on with their day?
I want to thank you for providing this platform for us to discuss and meeting again, Khalid.
Thank you. Thank you.
Yes.
And
Pleasure
hopefully
is mine. Thank you all.
we can have some collaboration in the future. I'm glad to see Alden. It's been a while since we haven't been live, and Rodney also.
Yes.
Glad to see you all. It's my pleasure. Thank you.
And thank you, Greg. I appreciate you as well
Yeah.
bringing this platform back from what we had earlier.
Yeah.
And I look forward to a lot more conversations with Khalid.
Okay.
Wow.
And Alden, you know, I'll be reaching out to you soon as well. So
Go ahead.
There we go.
You know, I love these platforms because people do business with people they know, like, and trust. And to be out and providing this stuff for free out online in the want for transparency and rub shoulders with other seasoned investors and individuals, I'm just grateful to be here today.
Well, thank you. Thank you all for coming.
Thank you, Greg.
Yes.
Thank you. Thank you.
Okay. Well, we'll set it up for next. Is this time 9 in the morning on Saturday is good for everyone? I know it's family things come up and you can't always make it, but you know, if it's a time that most people can make work.
I know next week I won't be here, but I'm sure you guys will do an excellent job, and I look forward to being on the next call.
Okay. Well, with that, happy Saturday, everyone, and go out and enjoy your day.
Thank you.
Thank you.
all right.
Thank you. Have a nice weekend. Thank you.